to continue carrying long stock, so they puked them out.
Interesting. All right.
Because rates have been rising for so long.
Right.
But now, if you think we're at the end of that rate cycle, okay, and you're short stock, you're not going to want to, even if the Fed raises rates this week, it's not really that important, because since bonds have had such a huge rally, if you think that the short-term rates are going to start to come back down at all, then it doesn't pay to hold short stock, then you'll buy it back. And the only time you can buy it back is on triple witching. So it's just an interesting little tidbit I'm throwing out there, but that's kind of how I'm setting up my week, but I don't know if it's going to work or not.
All right, so you got a little bit of a bias going in. What the interesting stuff there. Cross euro unchanged, pretty much. Dollar a little bit stronger, euro lower, sterling lower, crude back above $71, which is nice to see.
Crude,
gold a
by the
little
way,
bit.
let's talk crude for a second.
Yeah.
Crude is one sick puppy. I wouldn't get long in here with your money. Actually, we don't have to talk about your money tonight. We can talk about Bat's money. I wouldn't get long with Bat's money. And I would be, I think crude's going into the 60 handle.
Yeah, you know what? I think we're past. Sorry about this. Let me get to it.
What is it? Yeah, leave it on a daily or something. Don't lose. Yeah.
There we go. There we go.
That's ugly.
Yeah, I couldn't agree. I couldn't agree with you anymore. I think this is one where we had so much bad news pressed into the market last week again. Just like the week before where we traded between 80 and 90, this time we did it between 70 and 80, and the market still could not hold on to anything news-wise. So you've got areas we haven't been at for almost a year now.
And they tried to push it higher. I mean, they pushed out. It was a propaganda machine by Saudi Arabia. It was a propaganda machine. There was a propaganda machine going on. Saudi Arabia, Turkey, Russia. They were all throwing out all this. If you don't cut it out, if you keep hitting interest, if you keep hitting crude oil rates, crude oil prices, we're gonna tighten up supply and all this stuff. And I think it's actually the exact opposite. I think right now that this is a fantastic global squeeze on the Russian economy. I think this is the only thing that's kept them even, enough money to buy anything, to stay alive, is high crude oil prices. You hit crude oil prices, Russia just falls into a black hole.
Absolutely.
It's all over. There's nothing they can do. They have no other source of revenue right now. So I think it's much more of a concerted effort, a global concerted effort. And I think it's smart. I think it's paying off. And, I like it. It's a brilliant plan against, for whatever everybody wants to think, it's a brilliant plan against anything Russia has left in the tank. Yeah, and
finally last week we saw, and it was interesting. It took a while, but the oil stocks finally started to give appreciable, some chunky gains back out of the market, which was good to see finally. I agree with you. I think I don't think $70 is the bottom here. I think if we do test, it's going, whether or not we stay below 60. I think we're going to see the pain put into the downside. And whenever we do see that side, especially the downside tested, it's tested pretty. It tests longer and harder than when any of us think.
Yeah, I think if you can. So here's the hard part on crude oil right now. IV rank is pretty low.
Right.
So it's in the 20s still. But if it continues to go lower, stay here, it's just going to get crushed every day. But the risk in crude oil now is that the risk reward is that obviously there's plenty of upside if they can turn things around. But I see crude trading in the 66 range. But I don't know how much juice is left in it. They've absolutely annihilated, option pricing in there. So, a couple of months ago, we were looking at strangles that were, almost double what they are today.
Right.
So
absolutely.
It's a lot less attractive from a trader standpoint right now, looking at Jan options. I have a position on there, but it's small, and I've kept it on all year because it's working. But I don't love the risk reward in crude oil options here. So I think it's kind of time to, lighten up a little bit, keep a small position on, lighten up, and move to something else.
Right, absolutely. And now with that something else, and this is interesting. This is last week was the first week this market turned back to contango, meaning deferred prices were higher than the nearby prices. This is the first time we've seen this since crude traded back. First time we traded through $70 from the mid 50s. There was almost $7 of front month over back month premium here. We've seen all that taken out now. Another sign that the pressure is on the downside of this market right now. So
yeah, I actually think when you look at all the different commodity markets that trade tonight, we can talk about stock markets to everybody else, but we talk about the commodity markets. I don't think there's a lot of extremes left right now. Like, earlier in the year, we had extremes in crude oil, extremes in bonds, extremes in dollar, all that kind of stuff. I don't think there's a hell of a lot of extremes out there now. I think the yield curve is still an extreme. And if you're looking for an index extreme, I also think that the Dow verse is kind of an extreme, but I have not traded that yet. So the yield curve trade, we still have on 2s and 10s, and we're sucking wind on it. We're choking on that trade a little bit, but we've been hanging in there with it. But because it definitely has not worked. But also the trade that we haven't done is the Dow index, which is /YM,
right,
versus anything, because the Dow has been really strong on a relative basis compared to everything else, which is so weird because the Dow for the last decade has been garbage versus everything else. But I don't play this generally, so I don't have anything on in there. But it is something that you could just look at if you were. It trades 1-to-1 with NASDAQ, Russell, and S&Ps.
Right, but and see, this is always one I find the only time I use Dow futures really are kind of as synthetic earnings trades with some of the larger components. It's a tougher hedge.
Yeah. It's a tough one on multiple levels. I just brought it up because one of the few trades out there that to me is at an extreme. When you look at the Dow futures, when you look at the Dow compared to the NASDAQ, you look at the Dow compared to the Russell or the S&Ps, there's just a huge divergence in how weak the other indices have been relative to the Dow. I don't have it on, so I don't like talking about trades that I don't actually have on.
Yeah.
But I just brought it up as as something.
Yeah, absolutely something you can look at. You've got the 2s, 10s on. Really, for me, the extreme, I think, whenever the Fed does their 50 basis points, and the market will move on Wednesday when they talk.
50 basis points, if they just do 50 basis points here, it won't move anything. I don't even know if they're going to do 50 basis points. I know it's what everybody says. And if they do, I think it's the last one. And I don't think there's a lot of downside in bonds.
No, I agree with you. And you know what? If you take a look at, I know you've got 2s versus 10s. The things I'm looking at is and granted, it's further duration. That's why there's more extreme. But the 2s, 30s. Now we've seen the ZB rally almost 13 handles up to 130 before we came off 131. This 2-year, 30-year yield spread is still at negative 75 basis points, meaning that these 2-year yields are 75 basis points higher than the 30-year yields, ZB. So if you're looking for a different type of, rather than the 2s, 10s, the TUB spread they call it, 2s versus bonds, or ZT versus ZB, you do them 4-to-1, 4 ZT to 1 ZB, buying ZT and selling ZB. If you want to look at the true extreme in the yield curve, Tom, that's it right now. That is the widest swing.
Yeah, I don't trade that one very often. But listen, let's keep moving the night along. Let's go to John. Let's go over to, we're going to jump halfway around the world, go to Sydney, Australia, bring on John for a couple minutes, and then we'll jump right back to New York City and Chris. Let's go to John.
It's just funny that I still get the music.
You see, John, you're VIP, man. You're VIP.
You must feel sorry for me.
No, we don't feel sorry for you. We just gave you the music instead of a bonus.
Yeah. Right. How are we, boys?
All right, John, what's going on? So the Bears had a bye today, so you didn't get to watch the Bears game like you usually do. But
I really feel like I'm missing out. It's causing a little bit of depression. So, but I'll get over that. So, well, look, we're heading into the Christmas mode down here, and as you know, Australia gets pretty focused on this season, so it'll get pretty quiet. Might see if I can get some time off, providing Tom you sign that off. And
well, wait. Yeah. There's time off at the.
Yes,
no, not in Australia. It's like no. Don't get any crazy ideas. So
that's kooky talk, John.
Yeah, it's crazy talk, John. Yeah.
So we had a 25 basis point rise last week from our RBA, Reserve Bank of Australia, And so that brings our cash rate to around 3.1%. They are talking about potential for next year, but I tend to think sometimes that's a little bit more trying to throw a bit of fear into the equation as well. Because everything you look at in the market, you have to think that we're definitely crossed that pivot point. And I don't understand why they would continue to raise rates.
They didn't really, if I remember, because I have positions on the Aussie dollar, and we're kind of we're short some premium in there. I don't really have any deltas, but they didn't really do much last week. No. You know, and maybe it actually looks like it pretty much broke even for the week, but a big down move to start the week and a big up move end of the week. But you know, it's pretty flat. You know, like our premium came in a little bit last week, a little bit.
Yeah, look, I think you know, look at. Let's go to the US dollar. I mean, if you use UUP as your proxy there to have a look at, you can see the US dollar's found a bit of support there. Not that we're going to get into a technical analysis conversation, but you can see there's a bit of value there. So it'd be interesting to see how this plays out. And obviously all eyes are on the CPI this week. I think that's where the game is this week. Well, obviously everyone's looking for a little bit of something, a little bit of certainty about what the next season is going to hold. And I know everyone's going to be diving into that. But I think the Aussie has been, you're right, Tom, it's just been hanging around a little bit.
Yeah. I mean, like I said, I have one position on that's, you know, in the Aussie dollar. I mean, a bunch of strangles, but that's all I have on. I don't have anything on in the Aussie stock market right now. And our precious metal position, which is kind of which is kind of married to your markets. We're really flat right here. I don't think we have a lot of directional risk. We had some stuff on, but the IB rank in gold got down into the single digits, still there. So we took most of our stuff off. So we do have a silver position on, but it's hasn't done anything yet.
And they've even marked that out even with it back above $23. John, Aussie a little bit different than the rest of the commodity currencies. NOK, Canadian dollar, even Mexican peso, all getting hit pretty hard last week, between 1% and 3% on the crude story. Aussie able to hold in here? Are we kind of just, have we found a reasonable middle for the range here?
Well, it's a good question. I think, look, we all know the Aussie currency is a commodity-based currency, and I think some of the information coming out the past week about even BHP talking about some of the, increases they're going to need to mine for some of the renewables and things like that, like nickel, for example. Our commodities are really holding up, not only the dollar, but I think the market. So I think they're playing a key role. Could we see the Aussie dip back? Maybe. There's variables like CPI, like the US dollar, but there is strength in our commodity markets, and they are holding up more, as I said, more than just the Aussie dollar. So with that being said, I think there's some interesting plays to be made on the Aussie dollar, because I can't see the Aussie dollar falling back below 65 cents. Because for the Aussie dollar to go back below 65 cents, you also need another big push, a bullish push up on the US dollar. And I don't know if I can see that happening either.
Hey, Pete, talking about a couple other markets other than Aussie dollar, because I don't know how many people trade that, but right. So the S&Ps have dropped from 4,200 to 39. We're in the 39.50 handle now. So they're down 250 points, which is 6% off the highs, which is a pretty good pullback on a pretty good run. And bonds have gone from 132 down. Where are they right now? About 129.25 or something like that. So they've pulled back, a little over 2 points, maybe 2.5 points, which is almost 2%. Is there a market here that's like, or either of you, John, this applies to you too. Is there a market here that looks like it's, is there a market out here that looks like it's overdone very short term? Just that's because we're going into the holiday season. This is a tough, never sell a dull market type thing. Is there a market that looks like it's a little oversold, or do we, I'm hesitant to get short here. Let's put it that way. With
the run you've had in the bonds, do you think now they're going to sort of relax a little bit? I just don't know how.
I think they're an inside trade for the rest of the year. I wouldn't take a big directional position in there. I'm wide strangled, but they've sucked a lot of premium out. So, and I don't think anything's going to come in this week until the
right.
Yeah.
Yeah, it's gonna, after this week, bond premium is gonna go to freaking zero.
Yeah.
But you got to have a position on this. It's my biggest position right now.
Look, and then just to throw another thing out there, I'm just looking at the crypto world and Coinbase. I think Coinbase is looking quite attractive at these levels. There's some good premium sitting in there. You know, if you're looking some out of money, either selling the out of money calls or puts, but with the journey Coinbase has had down to these lows, it's very interesting. You'd question how much lower it can go, which I know is the worst thing. You don't want to say that, but I mean, the crypto seems to be.
I like Coinbase here, and it's one of my bigger longs at this point, but I just started getting long into this area, John, so I think you bring up a good stock. What's interesting about Coinbase is that they have very high implied volatility, and it's also a stock that I feel like, because it's a US listed company, I feel that if you want to make a digital asset bet, and you don't want a miner, like I own a little bit of Riot, a little bit of Mara, but those are miners, and I think they're cheap, but they're miners. If you want a digital asset play that lives in the regulatory world, that you have a reasonably good risk reward on, I think you got to like Coinbase here, because I know some analysts came out and said they lowered their price target to 30 last week, and who cares? It's the kind of stock at $40 where it lives it's exchange listed. It lives in a U.S. regulated world. Brian Armstrong seems to have his crap together compared to other CEOs, and in that space, and it's a pure play in digital assets. Like it's a pure play without mining risk.
But without getting into the fundamentals too much, I mean, Coinbase, everyone knows they've got a strong cash base, and I think going into next year, I mean.
Yeah, their risk is they're a one-trick pony.
Yeah,
that's the risk. The risk is that it's like buying a really good gold company, or buying a really good precious metal or mineral company. Or oil company. They're one-trick ponies. That's the problem. All right, John, we're gonna let you go. We're gonna jump over to Chris. And
all right, boys, have a good one.
All right, man. Take care.
Take care, John. Good to see you.
Gentlemen.
Hello, Chris.
Hey, Chris.
Hey, Pete, I missed you in Chicago last week.
I know, my friend. I'm sorry we were not able to connect, but certainly good to see you here, and it's good to see you part of Tasty Live.
It's excellent.
It was great to have Chris and Ilya in the office last week. We got to powwow and talk about tons of stuff. And so, we're excited. Chris is going to be part of the network now. And so, get ready, get your helmet on, as we said.
I'm ready.
After whatever we experience this year, what's the setup going into next year? What does it look like? I mean, if you want it to be directional, if you want it to be short premium, what's the setup for next year?
I think right now this is a market that still has a chance to be soft at least the next few weeks, only because I'm taking a look at the way that Fed funds futures are priced, and they seem to be underpricing the risk of the Fed actually delivering on what they've been talking about for the past month, which is if they were to release a new interest rate forecast for 2023, it would be higher than what they said it would have been in September. And so right now the market's pricing in a Fed funds rate that's going to end next year below 4.6%. That's where the Fed said they were going to do things in September. So for me, interest rates still can go up it a little bit more the next few months. And in that regard, that probably means a soft start to the year. More sideways chop is on my menu for the first quarter. Once we get through that final Fed rate hike, maybe that's February, maybe that's March, then we have clear skies. And that's when I'd start to look at perhaps a steepener trade in the 210 spread. As Pete knows from our time on Splash into Futures earlier this year, the flattener was something that we talked about a great deal of, and it worked out quite well. But I think that begins to reverse course sometime in the mid to late first quarter of 2023.
That all sounds great, but then how do you explain? So there's two schools. The first school is exactly what you just said. Look at the Fed funds projections, look at what the CME is saying, look at what the Fed's saying, everything else. The other thing is, which is the way I look at markets, which is just look at the market. And the bond market's saying something very different. The bond market, after the huge rally it's had, almost whatever we want to say.
So that's why, from my perspective, some softness can remain, at least in equity markets. We are coming off of a cycle low in the VIX. It's worth noting that this year, if you were selling stocks when the VIX got down to 20 or lower, coming into December, you were up 27% this year. And likewise, if you were buying stocks when the VIX rose above 30, you had a pretty good year as well. So for me, we're not out of the woods just yet. I think the fact that we have a little bit of a potential for another bump here heading into VIX expiration the following week, then we start to look at what may be a more favorable setup for equity markets and risk, generally speaking, in the final 2 weeks of 2022.
I like the term VIX expiration. Is that yours?
No, we've had a few guests on the Jones and Friends show, Jem Carson and, of course, Brady
like
Chuba.
That.
Yeah, they use that term a lot, so I've adopted it as my own.
Okay, you can have it. I deem that to be yours. I don't care about those guys. I think that's yours.
And now it's yours, Tom.
No. I'm not gonna. I can't take that for you because what's weird is that I don't trade. That is one of the few cash markets that I really don't ever trade, is like into VIX expiration. I think if you're not a market maker, trading VIX expiration is the hardest cash market to trade. Like it's next to impossible.
No, I personally don't trade it myself. It's just something that I know that's going on in the background, right? And when I have tried to trade around it, it's like playing CeeLo. It doesn't usually go well for me.
Yeah. I mean, it's a genuine coin flip, and you really have to do the opposite of what you think. But whatever, it's fun to watch, and sometimes sometimes you wonder how the hell did they know, or how the hell they didn't know, or how could they be so wrong, or how could they be so right? Who knows? But anyway, it's a fun term. I like it. All right, what else do you see? That's equities and bonds. What else do you like? World of commodities.
Sure. I mean, we saw a nice rise in U.S. real yields at the end of the last week across the curve, 5s, 7s, 10s, 30s. And as a result, gold has softened up a little bit here. Same thing for silver. Obviously, real yields are incredibly important for the precious metal space right now. Gold, silver, whatever you're looking at there, they're non-cash flow assets, right? There's no coupon, there's no dividend, there's nothing there. And so as real yields rise, it makes those precious metals relatively unattractive. I do think, in concert with the fact that you could see a little bit more equity market weakness this week, particularly if the Fed scares the lights out of people with a new SEP, then real yields get another bump. Gold takes another swing to the downside before setting up a rally into the end of the year. Of course, I was listening to your conversation on crude oil earlier. It's worth noting there's a little bit of a divergence in this market. Nat gas gapped higher by about 10% on the open today. I was looking for news flow or anything, couldn't find anything noteworthy. But I do agree. I mean, this idea that crude oil prices can stay lower is probably valid. I would question whether or not the market is willing to push crude much deeper than, say, $70 or $65 a barrel, given the fact that there's supposedly this bid out there from the Biden administration with the SPR. They have to start refilling the SPR at some point, and if they were to start buying back now, then effectively U.S. taxpayers actually did pretty well on the deal. They've been selling in the 90s and 80s. Of course, they're buying back at 65 net. That's a win. Beyond that, I do agree that this is something really important for the Russian economy. If the U.S. and its allies want to put more pressure on Russia and end this war in Ukraine, which should then have better effects on untangling the global supply chain and therefore helping reduce inflationary pressures, oil prices probably want to stick lower here. Russia's military budget now is basically 34% of its GDP per year. It's climbing very, very rapidly. They can't sustain this for a long time. Their economy is in shambles.
Not with falling oil prices. And I should have mentioned that nat gas move this morning. I mean, tonight, I didn't really look at it, but you're right. It's up like 60 some odd cents, which is a 10% move. Absolutely, it's been impossible to trade nat gas. I mean, it's an impossible trade. Every day it seems to move outside of its expected range by double, and you're not getting paid by the volatility in there.
Months with Victor on that show has been, you can't have 15 years of essentially no hurdle rate for investment and not have found some kind of pocket of malinvestment somewhere when all this tightening is coming.
I agree with you, but the question is, like, thinking about it just from a trader perspective, so not a big macro perspective for a second, just thinking about it from something that we can actually, go look at next week. Is there a marketplace is there a tradable marketplace somewhere that looks like it's maybe, you know, a little oversold? Like I wouldn't, like, if anything, I'd say China is more overbought than oversold right now, you know, just from where it was 2 weeks ago. But is there a marketplace out there that seems that it's, you know, it's grossly oversold at this point, or it's oversold, or is there any markets where you think, hey, this market's richer, like EM, for example, looks richer to me than the US markets? Like, I'm just curious for that perspective.
From that perspective, honestly, I think the dollar is a little bit oversold. I think if we're going to get a move in risk on the downside, I think we get reversals back down in the dollar. The Canadian dollar has been the one that's had the hardest time capitalizing on this dollar pullback. I think there's weakness there. I think the weakness in crude that you were talking about, I agree. I think the next levels are somewhere in the 62, 66 range, in that wedge somewhere. I think that would help the Canadian dollar to get beaten up here. So that's one I'm looking at. I'm still long the Kiwi because the trend is still there, but very, very cautiously, and looking for a reversal to confirm there to roll that back over the other way. Looking at an Aussie short, perhaps. Looking at ES futures, maybe around just under that 39 handle, 38.70, something like this. Looking for that to crack on a closing basis, and maybe looking at some short bets there. I think really the big sort of sweep for the risk on correction since October, a lot of that stuff now to me looks rich. With recession risk rising, looks like we might be getting ready to go the other way, back to the trend before October on a lot of these things.
That would be interesting, because that's like, I'm one of these people that like more so trust the market. And I feel like it's we've been in this market for the last couple of years that tends to get a little ahead of itself in either direction. And I feel like we might've got a little bit ahead of ourselves to the upside, but at the same sense, I don't look at things like Chris just talked about gold. And I look at the rally we had in gold off the lows, and I think to myself, okay, you know, maybe we pull back a little bit, like, I don't know, 25, 50%, whatever it is. And the S&Ps, maybe we had a, you know, whatever it was, 10, 12% rally. Maybe we pull back, okay, 5, 6, we just pulled back 6%. I'm cool with all that. But I don't think you're getting back down to those lows. Like, I think that there's a lot of good, there's definitely buying below this market, as witnessed by the last move in gold and bonds and in stocks, and so in China. So I don't care if everything pulls back a little bit, because I think that's really normal, and I think it's actually healthy. But I'm not looking at this market like, I'm one of these people that I'm looking at it like, okay, we're going to go range bound for quite some time here, and there may be a little bias to the upside for the near term.
I mean, I think for gold, certainly, because of course we've had bond yields come in as you start getting incoming economic data. If we continue to worry about growth, as we've seen over the past several weeks, as those bond yields come in, as long as the dollar is not on some sort of an enormous tear, you should see gold come off the mat here. I agree.
Okay, cool. Ilya, we're going to let you go. We're out of time. We're going to go to Victor. This is a short show Sunday night. Thank you. Coming to us from San Francisco, so we love it. We're going all around the globe tonight. But, man, hope your voice gets better. And that was good stuff tonight. Great. Thank you.
Thank you.
Good to see you, Ilya.
Good to see you, Pete.
Mr. Jones, where art thou?
There he is.
Tom, Pete, Tasty Nation, how you doing, darling? How are you? How are you, darlings? I'm sorry. Ilya, you know I love you. I'm just having a good time.
We had all your boys on tonight.
This is what I love. Let me tell you a quick story, everybody. And we don't have much time. And this story is so important that I decided to waste time with it anyway. Once upon a time, a young Victor Jones and Ryan Gray sat down in front of Tom Sosdoff, and we said, we got an idea. We think we're onto something, scratching at kind of the combination of sort of volatility and quantitative understandings of markets, and combining that with sort of this macro sense. And you said, nobody's going to listen to that expletive insert here. Ryan Grace and I sort of, if you can imagine a couple of guys playing violins, we walk off all solemn, basically looking at our feet as we shuffle away. And here we are, a full circle. And you've got
don't you worry. Hey, before
you've got, hold on, you got Pete on here. You got two macro studs, and I don't know what I am, maybe like a jailhouse economist or something like that, I guess, at my highest expiration.
Okay, listen. I didn't want to say it, but I'll say it now because you just.
Oh, here it comes.
You outed me. Okay. As I get a little older and I get to a certain point in my life.
Soft.
No, this is not a question of soft. I run out of challenges. Okay.
Yeah.
I run out of challenges.
Yeah.
So I realized last week that my new challenge, okay, is to break all you guys. I'm going to break you down.
Good luck.
I'm going to break each one of you down.
I'll tell you what happened. You tried and you couldn't with me, and you were like, all right, I got to get some new subjects in here. This guy is just completely, he's not malleable at all. What's going on?
I've done a pretty good job. I mean, listen, to be fair, it took me 8 years to break down Dylan Ratigan. In 7 or 8 years, I didn't break Dylan until the 7th year. Okay. It's you're stubborn. But you're getting there. You're halfway there.
It'll never happen.
Those two guys, they're not even gonna last 3 months. They'll have to go through 3 months.
I don't know. Ilya's got some fight in him. Chris is a politician at heart, so you'll think you're getting him, but you know
you're not gonna get Chris so easy. It's
that's the thing. He can do the dance.
Yeah, to demacro him, I don't think so.
Not happening. Not happening in your lifetime for sure. You guys were talking about the 210 inversion before. Just to throw something out at you, I think at one point this week we were like 84 points inverted or something. If Pete knows this more than I do, I think the twos were introduced in like the mid 70s, right? So we only have data on the 210 inversion back to the mid 70s. But after the introduction, I think in 76, the deepest inversion I think happened in 1980, and the deepest inversion was about 200 basis points. I think we've had 2 times where that 210 got to like 130 basis points. But in the modern era, so 1990 and after, effectively 50 basis points was the floor in that inversion. We've broken the mold this time around.
Yeah, and then 1980, you're talking about just
those were the days, huh, gentlemen?
hey, the first when I started to make money, and I opened my first brokerage account at Drexel, they sold CDs, okay, and I mean to customer you could buy a CD at a brokerage firm. So and I was just out of college, and I bought a $500 CD, and I got 19 and 3/4.
Oh, yeah, I was going to say. How many guys were standing around us in the Fed every time? If mortgage rates would ever get down to 14%, I'd borrow everything I could to buy every piece of real estate in the world.
Here we are.
Yeah, at 7%, I almost had a heart attack standing up just at the back of the trading floor. When bonds hit 7%, I go, they're never going to trade here again. I thought it was like the Dow trading 1,000. So that's how we think. So it's not that easy. I do think though that I do think, like I asked the question to, I think it was Chris to start off, and I'll ask you, Victor, because I think it's interesting. I looked at the beginning of 2022, and I felt there were lots of markets that were at an extreme. Bonds were zero. I mean, interest rates were zero. The stock market was at record highs. The NASDAQ was out of control. SPACs and, IPOs and everything was stupid. And I mean, I'm not saying that I capitalized on it as well as I should have, but I mean, at least I was on the right side of, I was a contrarian to everything. I looked going into 2023 and I'm like, I don't know what I like, or I don't know what I hate. Like I usually love something or hate something. I don't know. I'm kind of like in no man's land going into the beginning of next year. Like outside of that yield curve trade you just talked about, there's not really a market that I see that I'm like, wow, I'm head over heels of this one way or the other, long or short.
I would agree. The markets have this uncanny ability to get right to that pain point where you see no value and you see no discount, at least when we get past the turn, which I think 2022 was. I don't know what 2023 is. I told you before on Tuesdays, hear me out. I think you've had these massive changes in the macro story. You've had massive changes in monetary policy, massive changes in interest rates, massive changes in inflation, massive changes in inflation expectations to a degree, massive changes in the dollar in a post-COVID world, massive changes in the way we interact socially, how we do business, a shift in thinking about what is excess, right? All these cheap money or free money companies, the Ubers of the world, who now have to extract value, real value from the customer, and perhaps the amount that they're charging doesn't actually equal the value of the service that they're getting back. My point is, I think 2022, you saw a massive rate of change in a lot of these core macro functions, interest rates, monetary policy, dollar, interest rate differentials, all this stuff. I don't think geopolitics, I don't think we see that rate of change in 2023. And I think that sets up for a boring market in a way.
Yeah, I
think the mistake potentially is to think about the lack of rate of change as a bullish catalyst. Because I go back to something that Ilya said, 15 years of no hurdle rate, no cost of capital, jacking them up at the fastest that we've ever seen since the Volcker era. Even then, on a percentage basis, on a 4 or 5 times debt to GDP, 5 times global GDP, debt to GDP. Good Lord, just skip what I just said. The point is, we're massively leveraged. So we were almost getting to equivalent rates of the Volcker era. My point is that my personal opinion is that's going to take some time to work its way into the economy, and I would expect to make this actionable then. I think the 50 basis points we end up seeing this week, I don't think that will be the story. Right now, it's like 77% that we get 50 basis points. There's still a little, like 1/4 of a chance that the market's sort of pricing something a little bit more aggressive. I think by Tuesday, you get CPI, and whatever, if that doesn't, to me, that seems like too much of an outlier to leave the market. I think if CPI doesn't settle that out and we move to 50, then I think what likely happens is you get a Wall Street Journal article Tuesday night to make sure everyone's clear on what that interest rate move is going to be on Wednesday. But I don't think that is the biggest question. I'm going to nerd out for you for a second. I do think that summary of economic projection, that's sort of the key. I think it's likely that the Fed tells everybody to expect less growth in 2023 than previously. I think that's what the market's sort of been positioning. You've had 5 straight weeks of rallying in /ZB. Last week, you got this weird little doji candle, a 4-point move in bonds to basically get to where we started the week. I think, last week you got pressure on the market, but what did the worst? Small caps. Growth sensitive stocks did the worst. The Russell's down 5%. Nothing was spared in small caps. Value and growth, they both sucked. And I think that's the market sort of preparing itself for, a message that says, don't expect a lot less growth than sort of we put in front of you. And this has been every new piece of paper they put in front of the marketplace, it's been worse and worse and worse. I don't expect that to change, but I do expect Jerome Powell to have a smile this time when he serves you up a nice plate of, slower growth in 2023. I think his demeanor might change. He might not be Jackson Hole 2 in the same way that last press conference. He was all smiles, all confidence and bravado. He opened the door for a growth rally, and the market didn't really take it. We had a rally, but I was sort of surprised that the NASDAQ did not outpace the Dow Jones to the extent one would have expected, given how much the Dow had outperformed NASDAQ. It's like the market didn't bite on the growth assets over the last couple of weeks, which I was surprised about. But I think that's the story. I think they tell the marketplace less growth in 2023, and I think the risk to bonds is to the downside. I think, we've rallied 5 weeks in a row. If you get a little inflation spook, or maybe the market's already prepared for a lower growth scenario. To me personally, I know you think the trade is dead, but I think 129 is just this level that we haven't moved from. Wouldn't surprise me to see us back off this level.
So you think lower, 125?
No, lower than 129.
Okay.
So we've been stuck at this 129 level for like a week and a half or something. It wouldn't surprise me to see us back off.
Victor, what are they going to say in this meeting Wednesday that is going to actually, short of clarification on the terminal rate, that is going to get the bonds to move 4 points at this point? I just don't. I don't see them having anything left to say
Nothing.
to impact rates.
Yeah, I don't see them, maybe they move up unemployment or whatever. I don't see them really moving unemployment. I don't see them changing their inflation expectations. I see them moving down the growth expectations. And maybe the Fed funds rate, they boost where they thought they'd be in 2024 or something like that. Those are maybe the smallest levers that they can pull. But I agree with you. I don't think it's the Fed fright so much as just 5 weeks of rallying in that long end. Last week the 10-year pulled back, but bonds, the long end bonds still continued its rally. I love that tub trade you just threw at me. I'm going to figure out how to put something on. I'm a degenerate, and anything that has to do with the 30-year, I'm in.
Oh, well, you know what? You got to go wide. That go to the ultras. Do the twos against the ultras. That's really the crazy man's trade. No, I'm just kidding.
You had me a crazy man.
So Victor, I just want to bring something up. So you started the conversation off. Line one, you said you made a backhanded comment about Uber. Yeah, you
about Uber. Oh, okay, okay.
You talked about Uber growth, something like that. Okay. So I like to bring things back to reality. So today I had to travel to Austin, Texas. Okay.
Yeah.
So
shout out to Austin, a beautiful city.
It's a great city. It really is.
Great city.
And I was telling Pete before the show started, but I don't want to spoil my cherry bomb. But I went to Terry Black's today. It's a famous old barbecue place, and it's life changing. That's all I'm going to say.
Okay.
But I might end up in the hospital later tonight because I'm in a food coma. So I can't. But I've been waiting 20 years to go to this place, and I finally made it. But anyway, that's not my point. I took 6 Ubers today.
Okay.
Because I had a bunch of places to go. I took 6 Ubers. Every single one, I took the electric Comfort.
Okay.
Which is no big deal. It's just, whatever. It's just a choice.
A little humble brag. Okay, continue.
No. I'm telling you this because every single Uber I had, every single time I clicked on the app, I had 6 choices. And each one was just a few dollars away from the other. That's not the important point. The important point is every time I sat in the back of a brand new Tesla, each one was a Model 3 or a Model Y. And every single ride, I thought to myself, oh my God, I can't even wait for this market to open. I've got to buy Uber. This is the greatest company. Like all of us going through my head, because that's how sick I am. All afternoon, all of us going through my head is, why is Uber trading? I forgot what it is. I'm already long it, but I forgot what it is, like $28 or something, and Lyft's like 11 or something. I don't remember the exact prices, but I'm not looking at it right now. But I know Lyft's in the 11 handle. Uber's like in the 28 or 29, 27, whatever it is. I don't know. But is that Uber?
Yeah.
Oh, it's the 26 handle. So I mean, I'm like, oh my God, this could be the most, because I love consumer facing companies. And I'm thinking to myself, oh my God, these guys nailed it. Lyft's what, 11, 10, wow, it's $10. It's it's in the 10.
Yeah, $11. Yeah.
Yeah. Anyway, I just wanted to bring that up because since you mentioned it, and I'm thinking to myself, is there a better play out there than Lyft and Uber? Because that's all I could think about all afternoon. And then you mentioned it tonight, and I've been trying to pin all you guys down to get to some, specific stock plays for the end of the year and things you like and don't like. John brought up Coinbase, which I also like as a pure play, because I think that Coinbase at 40 is actually cheaper than buying Bitcoin at 16.5 or 17.
So I will say this. I am long Uber and Lyft in an IRA. It has nothing to do with their short-term business prospects. I think they're just, to me, those companies are long call options on self-driving. If self-driving starts to come to market, you immediately remove a massive cost from those businesses. And
welcome back to Secrets of Success.
How you think about them as
enjoy
assets.
the good life that could be yours.
To be wealthy, you gotta have a dream.
How can you achieve your dream if you don't have any? Look at what most people do every day. They live an average life with a 9-to-5 job, frustrated financially for 20, 30 years, and end up retiring broke. All because they don't dare to have a dream. Dream is what make empire was built upon. Dream is what make human being great. Dream is what make us excited about our life. So dare to have a dream. Dream big, now.
Look, here's the proof. I took the Tom Vu seminar. I bought 10 houses. No cash, no credit. How are you going to make money sitting in the couch? Go to the 90-minute seminar. Find out what you can do to change your life.
Look at all this wonderful lifestyle, my friend. I hope you enjoy it as much as I do. Life is wonderful down the island down here. You too can have a good life like this. From now on, if someone asks you, did you have a perfect opportunity to become very wealthy? Don't dare say no. Listen to her message. Maybe you can change your life. Here's Eleanor.
Hi, I'm inspired and I'm excited. This is an educational, fabulous course. In front of me, I'm holding a copy of my first deal. This is a home that I bought from a mortgage company for 50% of market value. That's 50% off. Think of the money that's being made here. I know this has changed my life and it can change yours. You should do it too. Thank you, Tom.
Thank you, Eleanor. Look at me. I'm 32 years old. Look at where I am. And look at where you are. It's not important where you are today. The important question is, where are you going to be 3 years from now? Are you going to be financially independent like I wish for you?
My name is Garfield McNair. I work at real estate part-time. Look at the properties that I have purchased. Go take the Tom Vu seminar. Do it now.
I believe with my secret of how to make millions and your determination, you can succeed. The question is, are you ready to work smart to achieve your success? Do you know some people pay $50,000 for a college education to get a dead-end job? How much are you willing to pay for this knowledge? The knowledge that made many people in America wealthy. The best time for you to start is always now.
We have learned so much. We could never repay this wonderful man for all our wonderful experiences.
I think Tom Vu and his organization, he's been a tremendous inspiration to us and taught us a system that I know works, and we're going to go out there and do it.
Yes, we are, indeed. Thank you, Tom.
So, you said you have no experience in real estate? No problem. I can still show you how to make a lot of money. I've taught thousands of people in the last 7 years how to do this. Take a look at one of my recent graduates. He took my class just a few months ago. Look at him to see what he did.
Hi, I'm Al Woodruff. I used to be a gymnastic instructor. Recently, I took the Tom Vu seminar. Look, this is the first house that I bought. I made over...
Another blunt, man. These is good times.
All right. We're going to learn the truth about hedge funds, regulators, and the financial media from Uncle Frank, apparently. Uncle Frank. All right, give it to us.
Welcome, everyone, and thank you for tuning in to hear my trading and market updates. This is Uncle Frank, and I'm not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Please remember to hit the like button if you enjoyed the presentation, and be sure to subscribe to the channel so you're alerted when I have new information to share. So now let's get into the latest updates. Hey, welcome back, everyone. Let's kick off this episode with a tweet from Jeremy. Will you look at that? Matt Taibbi has been trying to expose naked shorting for a long time. I bet everything ties together. We are not in a short squeeze play by chance. This was meant to happen. Everything is happening for a reason. And Jeremy is pointing to a tweet from 2012. It's funny. They always say naked short selling doesn't exist, yet people keep getting caught doing it. I think Jeremy and Matt are both right. Now, guys, on the left, you can see a weekly chart of AMC. It's down just over 70% for the year. On the right side, you can see a daily chart of our preferred share APE. It's only been around approximately 110 days, but it's down 88.31% since its inception. The question I never hear anyone ask is if AMC Theaters is such an awful, doomed company with no future, and you've knocked down the price of both of these stocks this dramatically, then why haven't you covered? Could it be that you can't unless the apes sell? Or is it that the short position is far greater than we can see on Ortex? I contend that it's both. When I look at the weekly chart for Cinemark on the left, I see a smaller yet similar company that's only down 28.57% for the year. On the right, we have another smaller competitor, Marcus Corp. Its weekly chart here shows it's down only 14.3% year to date. Now, these companies are smaller but experience the exact same trauma due to the pandemic and an extreme lack of movies to display. But why the vast difference in price? I can only conclude it's due to predatory short selling by the hedge funds and the prime banks and brokers that enable
That's all you can conclude? Wow. What about the existing financial health of the company? What about the existing debt? What about the way they handled the pandemic? I mean, this is ridiculous. You can only conclude that it's because of criminal short selling? Then you're a fucking idiot.
Now, I'm bringing up the prime banks and brokers because it's easy to forget that without them, the hedge funds wouldn't be able to naked short our stocks. While we're busy making funny memes about Ken Griffin, it's the primes that are running the orders. Everyone remembers this statement of financial condition from Citadel Securities dated December 31st of 2021, where we were shocked to learn that their securities sold but not yet purchased stand at $65.7 billion. I wonder what they're at by now. But few people I talk to have seen this recent statement from Morgan Stanley dated June 30th of this year, showing securities sold under agreement to repurchase at an alarming $102 billion. Now, for some unknown reason, the financial press refuses to talk about naked short selling or synthetic shares unless it's to mock retail shareholders or declare that they don't exist at all. And sadly, we seem to get about the same exact treatment from our regulators. The only time we seem to hear about hedge funds breaking the rules and laws is when a small one gets caught or a large one finally blows up, like Archegos. I can only conclude that the financial press and the regulators would like us to believe that predatory short hedge funds simply put on a legal short trade and then head to the golf course and hope that the price of the stock declines based on the strength of their analysis alone. Now, that would be great if it were true, but sadly, we've come to learn the hard way that that's not the case at all. Now, I'm not accusing anyone in particular, but it's clear that predatory short hedge funds deploy a myriad of tactics
you can't actually name one
against the securities rules
that's relevant
or laws,
here.
And that no regulator or financial journalist is going to do anything about it. After the past 2 years, we've seen it all. Naked and abusive shorting, outrageous FTDs, naked call, married put strategies, hiding the FTDs in the money options, dark pool abuse, payment for order flow abuse, labeling shorts as longs, distraction plays, spoofing and layering, abusive algorithm trading, and HFT trading. You know, I mean, you
What's
name
the difference
it.
between algorithm trading and high frequency trading again? God.
And guys, if all
I love those lists when they have these long lists because about halfway through they start repeating themselves always.
Now it seems like AMC is somehow connected or embroiled in this FTX collapse scandal.
No, no, they just make it part of everything, trying to fit those round pegs in the square holes.
Marcel. This leads me to believe they can rehypothecate token swaps or tokens themselves as share locates. And he posts his evidence here.
That's not evidence.
And what does AMC or investor relations have to say about all this? Well, basically nothing. John Merriweather, the head of investor relations, has been absolutely silent since November 14th, has not released any of the good news that has transpired. But at least he did send an email to a concerned shareholder regarding these tokenized AMC securities. Thank you for your email. AMC is aware of public reports regarding FTX's bankruptcy. AMC has no affiliation whatsoever with FTX. AMC has never authorized any tokenized AMC shares, nor benefited in any way from any tokenized AMC shares.
Well, there you go. So it's not relevant at all. Not benefited in any way. I mean, you can have positive benefits, you could have negative benefits. And he said that they have not benefited in any way from any tokenized AMC shares. So that means that it hasn't helped them and it hasn't hurt them. So it is a complete non-issue. I hope that he, correctly states the conclusion here.
Any inquiries or complaints related to FTX and any securities associated with FTX should be directed to FTX or the appropriate regulatory authority. Be safe and well, John.
Nope.
Guys, in light of all this information, I've been forced to admit that we will never beat the predatory hedge funds in the market where they can cheat and break the securities rules and laws with impunity, and regulators will stand by and watch and do nothing. No, we will beat them in the one arena they can't cheat, and that's at the box office and on the balance sheet. In my next video, I will present why I believe we've already won on this trade. The short hedge funds will control the price of AMC and APE until...
I mean, there were 900 releases before the pandemic, and it got cut in half. It literally got cut in half, and so did the gross revenue from the box office. So expenses don't scale the same way.
They can't. They will not cover until they're forced to cover, because by doing so, they would face, or many of them, or some of them could face, a catastrophic event. I am not an investment advisor, and this is not investment advice. Hey, I want to thank you.
But you're afraid of being sued. Wow. Okay. So the truth about hedge funds, I mean, that didn't say anything. If they find fact in FTX related AMC tokens, I will fully support whatever action. Well, even if they existed, they didn't affect AMC at all, so it doesn't matter. But of course, gaslit. No sell. Wow, it's been a while on that one. They will all fall to their knees. The shorts are done. Okay, let's move on. God, this is so fucking stupid.
This is not financial advice. It's not legal advice for entertainment and educational purposes only, and everything I say is my opinion. Please don't make any financial decision based on anything I say in these videos. That being said, hit the like button, subscribe button, on that YouTube algorithm stuff, so you get the videos I put them out, see what I'm thinking, see how I'm analyzing that data. Like I tell you, every day, the data they release us is false. Listen, the hedges' major narrative, besides no one going to movies, is AMC has debt. AMC has so much debt. They can't be profitable. AMC has debt. That's what they've been screaming for the last 24 months. But here's the thing. AMC only has $5 billion in debt.
This is the new technique.
Which compared to a lot of the other institutions is very, very small. Yo, Verizon. Okay,
Here we
Verizon has $147 billion in debt.
Oh my God.
Do you see any negative articles? Do you see anybody telling you to sell your Verizon shares? No. T-Mobile has $80 billion in debt. Where the articles telling you that T-Mobile has $80 billion
I'm just gonna let him
sell your T-Mobile shares? You don't see that.
2 minutes, less than 3 minutes.
Discovery has $97 billion in debt. Where are the articles telling you to sell your Discovery shares? Comcast has $96 billion in debt. Where are the articles telling you to sell your Comcast shares?
This is why this clown
$16 billion in debt.
Didn't become a lawyer.
I don't see articles telling you to sell your Netflix.
Because this is some
Amazon.
logic right here.
$51 billion in debt. Where are the articles telling you to sell your Amazon shares? And Disney has $48 billion in debt. Where are the articles telling you to sell your Disney shares? You don't see them. You know why? Because they don't need those shares in order to survive. They need our AMC shares in order to survive. And even though AMC only has $5 billion in debt, they keep pushing that narrative. Not because it's bad, it's because they need our shares. That's really the bottom line. Without our shares, they go down. Anyway, hit a like button, subscribe on our YouTube algorithm stuff, and tell me what you think about Discovery having 147 billion shares. I mean, 147 billion in debt.
Yeah.
And there are no negative news articles. Anyway, have a great day. God bless. And
let's take a look. So I found this site, Jika.io. I have no idea, but I found it, and it seems to be pretty cool. So you can compare aspects of the fundamentals of various companies, and it'll display them in a pretty cool way. So we can put in your symbols here. So I have Verizon, AMC, and Disney on the quarterly reporting period. Year range of 2018 to 2022. And then we can add our metrics here. So I have market cap, revenue, net income, and debt ratio. But there's a lot of, all the different accounting metrics that you would want. They're all there. You can add them. And there appears to, well, I haven't hit the limit of how many parameters you can add, so I don't know how many there are. But so we can look at these charts here. So here's market cap. Let me make this a bit bigger. Here's our market cap comparison, right? So we can see AMC as of the most recent earnings reporting. And by the way, AMC is the purple line on all these charts. Red, Disney, AMC purple, and Verizon is blue. So AMC's market cap is 3.6 billion as of the reporting period versus 159 billion for Verizon and 172 billion for Disney. So right there, we can see that these companies are operating on a different level, a different level of cash flow and just a different order of magnitude even. So revenue wise, AMC 753 million compared to 20 billion Disney and 34 billion Verizon, right? So reminder, 1 billion is 1,000 million apes. So it's quite a bit more, in fact. Net income. So now we start to get into the profitability aspect here. Net income, AMC, negative 166.7 million, right? Disney, net income, positive 162 million. So that's higher than zero by about the same amount that AMC is below zero, just to put it in perspective. And then Verizon, positive 4.9 billion. So we see a vast difference in profitability there. Also, the debt ratio. So here's really where it gets interesting, right? Last report here, Verizon 0.76 debt ratio, Disney 0.47 ratio, but AMC 1.28. So this is a ratio of debt to total assets. So it's kind of a comparison of based on the size of the company in terms of assets, what is the ratio of debt to assets, essentially? how much debt do they have as compared to the size of the enterprise. And obviously, so in this metric, a higher ratio would mean they're more over leveraged, they're more at risk. So this also is an explanation as to what, okay, yeah, sure. Verizon has a higher dollar amount of debt, but how does that compare? So getting into the difference between it's ridiculous. Concrete numbers versus percentages and ratios, which obviously you need to understand in this business because, I mean, it's a fundamental principle, right? So that's ridiculous. I don't know what people are saying here, but that the float has been sold so many times over. Yeah, right. Okay, sure. Never knew these companies were in debt like that. Well, because that's the wrong way to look at it. You can't just compare the dollar amount without taking into consideration the size of the company, how much money they bring in, how much money they pay out in expenses, and what is their net income. What is the debt ratio? That tells you nothing about that. So yes, you can gaslight and grift and mislead and compare specific concrete numbers without providing a context that makes you a charlatan, grifter, fraud, manipulator. Period. Does. This guy has no business putting out videos like this that mislead people. It's outrageous. It's outrageous. And these people clearly don't get it. Great point. Same as Disney, who has high debt also. Sure, they have quote unquote high debt, but look at the ratio 0.47. Look at the revenue. They brought in 20 billion. Okay, like it's the wrong way to look at it. They don't need or want AMC shares. Yay, AMC's debt to equity ratio is fine. I have no idea why people think this is not a fundamental slash squeeze play. They will be cash flow positive, signed a huge deal with Netflix, and our #1 movie theater chain. It's just because of inflation. Different situation altogether, but the difference is Verizon has over $360 billion in assets, and their debt is called good debt. It is to grow their business, adding new technology like 5G towers across the country and new lines so they can reach more customers, whereas AMC debt is garbage debt to keep the company afloat, and Verizon is actually profitable, and AMC isn't. So we didn't have to go down too far before we saw one, so that's good. He has a camera and a YouTube channel, and this information needs to get out to the people. Oh, okay. Well, I guess I'm out of line here criticizing it. I'm glad that people spotted it in the comments, though. Oh, so MMTLP is the canary in the coal mine now. If it don't squeeze, there is no hope for any other ticker to squeeze. Didn't they say that about BBBY, or was that which one was that? GTII, or I don't know, GTII? 147 billion in debt. That can't be accurate. How the hell are they still alive? Who would lend them money? Well, see, that's the complete just ignorance that these people have. Oh my God, and I call this large numbers fallacy, large number theory. You throw out a large number and don't provide context, you will elicit emotional responses, and that's exactly what this is designed to do, and that's exactly what this is doing. Verizon isn't losing almost 900 million per year. True. Communications isn't a dying industry. Movie in theaters is a dying industry. Exactly. How about Verizon makes a profit? They pay a dividend in cash and not worthless ape shares. They won't run out of money in the third quarter of 2023 and file for bankruptcy. And most important, Adam Aron isn't running the company. Ooh. I see this. Wow. So you saw that too, Model 3 dude. And, beat me to it. Okay. This what came up yesterday, and I didn't see it in time. So I don't know here. Jesus, Judas, and Adam, Aaron. I don't know what this is about.
What's up, everybody? It's the Common Sense Investor coming at you with another video. In this video, I want to talk about Jesus, Judas, and Adam, Aaron.
We're not endorsing any religion here.
I'm going to talk about the Bible for just a few minutes. And I know some people get offended at that. Don't ask me why. But I can see them now clicking off the video because they don't want to
no more offended than we get when you talk about any of this other made-up shit.
This is my channel. I can talk about what I want. And tonight, for those who want to hear the story, I'm going to share with y'all the true relationship between Jesus and Judas. And then when we're through with the story, when I bring in Adam, Aaron, you will understand completely what I've been trying to tell y'all. Now, little background. Israel was invaded by Rome. When they took over Israel, they set up principalities, all right, for governors and kings and so forth to rule over the Israelites. In Jesus' town of Galilee, it was King Herod, okay? King Herod, as you can see right here, if you Google it, you'll find out that he was tetrarch, or the ruler of a minority principality in the Roman Empire, in the city of Galilee, in northern Palestine and Persia, east of the Jordan River and Dead Sea, and ruled throughout Jesus of Nazareth's ministry, okay? Who was king of Israel during the time of Jesus? King Herod. Yes. Why was King Herod the king of Israel? Because the Roman Empire had conquered Israel, and they came in and set up authority in the districts. Okay? Stop. Erase that. Let's act as if Rome never invaded Israel. Okay? And that things continued on in its natural course of Israel's history. Who would have been king at that time in Israel's history when Jesus had his ministry? Remember now, Rome hadn't invaded. Everything is going on just like it should have. Who's king over Israel if Rome hadn't invaded? Answer. Jesus. If Rome had not invaded, Jesus of Nazareth would have been the king of Israel. By that I mean he would have been sitting on the physical throne, the physical crown. He would have been Israel's king. But Rome came in, conquered Israel, put him.
How do we know that? I don't think that's true. I mean, it really makes no sense. But I don't want to get into a debate about religion or history here, but I don't believe that this is accurate. Anyway.
Him down to the position he's in, where he's now a meteor carpenter. And the people are waiting for their king to stand up and defeat the Romans. Who are they waiting on to stand up? They're waiting on the king. See, everybody knows who Jesus is. It's not a secret that Jesus, had Rome not been there.
Yes, Model 3 dude. I think we can. I want to, highlight this separately here. Yes, I think we can agree that those that are still here talking about AMC, excluding us, have no clue about the market. I think that's a fair statement, my friend. And CSI got high as hell and had a thought because he's got that good Louisiana weed, I
Jesus
guess.
would have been ruling Israel. Why? Because he's of the lineage of David, and at that point, the buck stopped there. He's the king.
The real shit you want's in Michigan, though.
And defeat the Romans.
That's where it's at.
And he said, "It's not my time. Be cool. It's coming." Well, the day finally came when Jesus started his ministry. And when he walked by and he seen two brothers and he said, "Follow me." And I love the way the preachers like to try to mystify it. It was like, and the Holy Spirit descended upon them and they followed him and they never met him before. They knew who Jesus was. They knew he was supposed to be a king. Prove it. He goes to the synagogue and he walks up to the front and he reads from the scripture as is what? His custom. He's the king. That's why they were so mad at him. Now, he's getting his band of followers together. And we got some thugs. We got Peter. Pull out his sword, chop the son head off.
Great idea. Compare it to religion.
And Peter's got his buddies.
A highly personal and emotional topic.
Which translated means basically the assassin.
Highly divisive topic.
So Jesus got a gangster like Peter. He's got Judas around him. He's got all these other. He's got brothers.
And unprovable.
Back then that meant something. They die together. They all ride.
Based on faith.
And they're waiting for Jesus to say the word. And we'll kick these Romans' ass. But Jesus would not.
And not empirical evidence. I mean, really, it's perfect. It's a perfect.
Put Peter in check and tell Peter.
Approach.
I got a plan.
For these guys.
Peter's like, but how long is this plan is finished, Lord? It's almost to its completion. Be cool. Well, that doesn't sit well with a part of his inner fraction. Okay, Judas Iscariot, the man with the knife, the assassin, says he's going to take matters into his own hands. That he's got a plan of his own. That he will go down there and he will tell them where Jesus is at. And when they show up to arrest Jesus, Peter and them will attack, and it will be on. And it went down just like Judas expected. Peter jumps up out of a dead sleep, swipes the high priest's ear off his ear, and Jesus got to go, not yet, Peter, stop. Not yet. But it's coming. Relax. These things must happen first. Now, it got so bad for Judas, Judas eventually kills himself. Y'all know the end of the story. So now let's bring it all back around. We got into this play. and we are looking for the short squeeze. Okay, they went short, we went long. It's that whoever can outlast who, and we won.
When you go high, when they go low, you go high. All right, I'm gonna take it back to normal speed now, since we got through all that garbage.
We went long, and we are looking for the short squeeze. Okay, they went short, we went long. It's that whoever can outlast who, and we've won. All right, and we want to know.
How do you, what? You won. Oh, great, you won. You think you won. Is that because of the ayahuasca? Or the whatever? You didn't win. Look at the chart. Look at the price. Look at the price history. You lost. Or at least you're not winning. Unless you went short. But they went short. You went long. Made the whatever win. I think at this point it's, you know, how can you claim that you won? Seriously, how can you claim that?
Oh, where's our money? And we're getting told, relax, be cool, it's coming.
The cock has to crow 3 times.
But some of us don't want to
relax,
have to be calm.
No, you have to deny Adam Aron 3 times before the cock crows.
Look at that chart, people. I'm telling you, the day would go by so damn slow because I'm watching each tick of the clock on the chart, waiting for the MOAS. And when it don't come, I get mad. When I see those red bars start heading back down, I get mad again. That's why I want Adam Aron to do something. And he says, I got a plan. But some of us want to take matters into our own hands and do things contrary.
So CSI, the steadfast Adam Aron supporter.
It frustrates us. I know it does.
We just have to trust
the
plan and trust the man. Trust the man with the plan.
We're not going to
because he can.
Because the story went on like it did in the Bible. Jesus goes to the cross, raised from the dead, so forth and so on.
So is Jesus AMC in this thing? Is AMC going to be crucified and die and rise on the third day?
Interruption there did not stop the plan. And what people are planning to try to do is not going to stop the plan.
It's not surprising that somebody would talk about this way, would be completely devoid of the ability to use evidence-based thinking when it comes to something like a stock, right? Taking into account the historical accuracy of Hebrew scripture and the New Testament. It's you know, not surprising. It's also, well, it's also not really that useful.
Has a plan. He's the CEO, and the scripture tells me Michael, the archangel, would not bring a railing accusation against Satan. He said that's up to the Lord. So I'm not.
So only the Lord can question Adam Aron. I mean, we're to the point where they're literally talking about this as if it were, as if it were. Oh shoot! Did I close it? I closed it, but we were already at the end of it anyway. He's literally saying the scripture tells me that I should act like this. So be patient. You know, the Lord works in mysterious ways, and no one knows the day or the hour when the MOAS will come. I mean, I've never seen this level of desperation, to be honest. It's pretty interesting. Okay, so then we have no, we'll just do it back to back. CSI.
What's up, everybody? It's the Common Sense Investor coming at you with another video. This video, we're going to talk about the
tokens,
FTX meltdown, and the AMC token.
We may have to speed
I
this
know
up.
I'm a little bit behind on the story. I don't report on it because I'm not a crypto person. Okay, I do crypto on the weekends for fun, just to have something to watch. But here's the thing. I was over in Discord, and Matt wanted to talk about the ape token. And I said, Matt, look, I really don't know anything about it. And he said, I know. He said, but we're trying to figure it out, like with the technicals, like trying to track it down through the blockchain and stuff. He said, but nobody's using common sense to get us on the right trail. And I said, okay,
well,
what do you need?
there you go.
He said, just hear me out. I said, okay. So he began to tell me the story of the AMC token, as he understood it. And I said, okay. Then I had an even better idea, that I would tell the story of FTX as I understood it with the token. Matt would listen, and he would correct me as I went, and then we could come to a clearer picture of what's going on. So I said, over there on FTX is a token called AMC. And he said, yes. I said, how did the tokens get there? He said, what do you mean? And I said, they didn't get there by magic fairy dust. How did they get there? He said, FTX minted them. And I said, wait. Now, I just got off an interview with Miss Diane where we discussed minting gold. All right. And I can understand that process. And then I remember when we get our NFTs from AMC, we're sent the email, and we have to go to the website. We have to click the button, and the NFT is minted, which means created. So somebody over here on FTX created 4 million AMC tokens. All right. And he said, yes. And I said, who minted them? Who created these tokens? And he said, FTX did. I said, okay. So now FTX is on the hook for those tokens because FTX is the one that actually created them. And he said, yes. I said, okay. We're getting somewhere in the story, people. It's going to have a really wild ending at the end, so be cool. So then I asked, well, how much is the tokens worth? He said, they're pegged to the AMC share. They're the same price as AMC share. I said, okay, I can understand that. We just went through that with something pegged to the dollar, Luna, or whatever it was. So I understood that. And I said, so somebody goes to FTX. They want 400 million AMC tokens created. FTX says, where's your collateral for them? We're going to peg them to AMC shares. 400 million shares of AMC. And I said, stop. Who was that? And he said, I don't know. I said, you don't know who went to FTX and requested these tokens to be made? And they said, no, we haven't got that far yet. He said, it's a tangled web. I said, well, it's very simple. You need a fucking suspect list. It's very simple. If I or you were to call FTX and say, we want to create 400 million LMNOP tokens, Sam would say, okay, what you going to peg them to? What's their worth? Oh, we got LMNOP stock. Okay, how many? 400 million. You got 400 million LMNOP stock? Yeah. Stop. And that's when I had it figured out. Whoever requested 400 million AMC tokens to be made had to have 400 million shares of AMC shares to back those up, right? Right. Who has 400 million shares of AMC? Ask again. I want a name. Who owns 400 million shares of AMC? You say nobody. I say bullshit. Somebody owns 400 million shares. They were using it to back this up with. Watch this. Next question. Once I figured it out, I said, when did this happen? When was this created? Oh, that's where it gets good. Don't you remember on January 28th and blah, 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 blah. I said, stop. This happened. The creation of the AMC token happened around the January event. And he said, yes. I said, okay, stop. Somebody during the January event needed collateral, and they used 400 million shares of AMC as collateral to create these tokens. Who was it? Well, don't forget. Remember Apex Brokerage, and we've talked about this in the past, that during this time frame, and here's the chart, Apex Brokerage was so over leveraged, they had reached a limit of over 400 million shares of AMC. So if Apex Brokerage was to have approached Sam Bankman-Fried and said, look, we want to create these tokens, he says, where's the shares? He said, we got them. 400 million. But they got to get them off the books because the pot's fixing to blow up. They got to do something with these shares. So they shipped them over here to FTX. And this was able to start over again. That's why there was a push back in the beginning to get out of Robinhood, get out of the Weebles.
No y-axis on that.
Apex
oh, there it is.
Was falling.
Too small, though. Jesus.
And they used their shares of AMC as collateral because they claimed to have had 400 million shares. There's the chart. And after the January event, it went down. Now, if there was any way for whoever hacked into Weeble and found out how big a position that Apex was holding, you'll find that every one of these clearinghouses,
Apex doesn't
as
hold.
they reached their maximum capacity for the float, they did this with it. They
I mean,
went
this
over,
is
they
just
dropped them
so
off. They created a token. They used that as a fucking
scatterbrain
system, and they were able to take it off the
hold
balance sheet
them
over here, and they were able to sell more. And that's what's been going on with FTX and the AMC token. So, hope y'all enjoyed that. That's what's happened. Love y'all. Be blessed. The suspect list for who's creating these tokens.
Come with me. Hail Mary, run with me. But you have no care.
Play it again.
You know I was fucking around with this one. 2 seconds. I don't need that commercial. 2 seconds. There you go. I'll hit you motherfuckers with some Sunday morning Barry Manilow. Have a civil war. It's not. What's the point of this stream? To keep your mother, you know, like feeling like me and her are still connected, because I told that bitch I kind of want to see her no more, you know, but every now and then she, you know, she needs to see my face.
Oh boy.
2 seconds.
Yeah, it's from today, Model 3 dude.
Any input? Yeah. I already told you motherfuckers, there's gonna be a fucking, America's not gonna have a civil war. It's not. It's gonna have dirty wars. It's gonna be like when motherfuckers in the dark are offing motherfuckers. A civil war? Nah. One, America, everybody's an American. Two, motherfuckers are too lazy. And at the end of the day, truth be said, there's only like 2,000 motherfuckers causing problems. You know. Si Argentina gana la Copa, va a ser triste. No por Argentina, no, pero Argentina está mi corazón completamente. Pero yo tengo muchos amigos que son brasileños y están tristes de lo que pasó. So, I have to go back to Buenos Aires. I haven't. I have to go back. I just know there's long flights on the head, but let me see what I got here. Let's see. Welcome to my dark side.
Is this the same channel? Because he only has 8,000 subscribers.
Dark.
Okay, this isn't. Yeah, this is a.
Let me see here.
Yeah, it's a second channel. See you after the run. 6 days ago. So yeah, this is the latest video.
The other side, and you go, oh, wait a minute, where did? I just said that right there. I mean, they're probably gonna black this, but it's the same thing I said in the live stream. I don't. Whenever you do, see, this is my thing. When you do an audit.
What happened to your AMC brackets?
Live, real time, and you put the numbers out there, and you contact the nefarious players on the other side, and you go, oh, wait a minute, where did you get these million shares from? That turns into a different thing. What's up, Brett? Yeah, I jumped on this, but listen, I had to split the channels up. Like that one, I'm keeping it for stocks and shit that's important. But right now, nothing's important because we're just waiting on COSM to do the nonsense this week. So on this side, that's
COSM.
GTI brackets, ask the company. That motherfucker could have gone to over $100. Do you even understand that GTI is OTC? They're the ones that got to come up with the information. I don't fucking, you know. Did you hold your COSM? Sell? No, I haven't sold it at all. I kept it completely. I haven't sold it at all.
Wow, awesome.
You know, I'm in the 6-figure range on that motherfucker. You think I'm gonna fuck around? Let me get a couple of bucks on it. It's gonna be crazy. Let me get 20, 30. Hold on a second. Let me calm myself down here. Look, I even got the celebration cigars for this week. I'm fucking happy as hell. You kidding me? When I coach a disabled veteran, God bless you. Listen, here's how I said. It's hard to coach people because it's a lot of emotional responsibility. So this is why I just put out there what I'm doing.
That you take seriously. God.
2 seconds here. Let's see what else I find here.
From the first subscribers to 100 million. From the first views.
See, if I get 100 million subscribers,
Oh my God.
Something. People.
Clearly, he's not worried about this one being demonetized. Oh my God.
Duran.
I'm taking no chances with that. I don't want the video shut down.
Fucking Netflix. Shit like that.
Anyway, he said nothing's important anyway, so. Oh God. Multi-day halts. Yep. So he's pumping up COSM still, apparently. Let's see what he said 6 days ago.
So here we are, Sunday night. Well, I wanted to put this
This is
video
last week. By the way, not today.
So many people out there talking shit, and I don't give a fuck if you call Santa Claus, the Tooth Fairy, or whatever. Have fun. But like I told people before, whenever a play is going to have a run, I am not going to be broadcasting during the run because that is your run. You decide whether you buy, sell, hold, you know, get touched in the no touch touchstone. You can do whatever you want to do. But obviously, I have to manage my numbers, and I got to take care of some things this week. So you guys already know everything you have to do, whether you're in the play, not in the play, whether you're in the play or whatever. I think it's now time for everybody to accept the fact that the whole era of the meme stops has come to an end. We're at the end of 2022.
Ooh.
And the plays that people have now,
I wonder the videos
play and you
all black.
Run, you hold your position or you sell your position. That has nothing to do with me. There are going to be plays that are going to be wrapping up at the end of this week towards next week. That's what's important to me. Now, I hope everybody makes money. I hope everybody's safe. But at the end of the day, moving forward, I have to also watch my portfolio, like you have to watch your portfolio. And there's a billion people on YouTube saying this is running, that's running, hold to this, do that, whatever. You can look at all of them. At the end of the day, the plays that are out there, you already know what they are. So you do what you're going to do. I wish everybody the best, you know, and that's basically it.
I have a, I'm going to overlay a different video with this.
As far as me being back,
I think
you
it'll
know,
be
back
more
home
appropriate
and taking care of some medical stuff and, you know, moving into the new place and getting on with life, I'll pop up later on and I'll chime in on some stuff. But as far as this week, no, this week belongs to all of you. You guys
all of these guys
have to make a decision what you're doing, what play you're supporting.
He's ready to make a
what play
decision.
you're not supporting, who you're listening to, who you're not listening to, whatever. This entire nonsense has become laughable because it's turned into like Lord of the Flies. Everybody's a retard saying, you know, I follow this, I follow that, I like this, I hate that. And I'm like, I'm too fucking old to deal with any of that. So I hope your bank account at the end of the week reflects your decisions, and I hope you make some good decisions.
Is he doing the
With that being
jerk-off
said,
signal there? What is that?
Good luck, everybody, and I'll be
Or
seeing
she's-
everybody once I am, I will say, out of my first doctor stuff. So, shine love. Take care, everybody, and may the transmifidite be with all of you.
Okay. Haven't really commented on these futures yet, but I'm not really sure. So we gapped up here, got the gap up in the stock markets. Crude oil's up 1.5%. Natural gas is up 9% here. Yeah. Volatility is actually down Volatility is actually, well, it's actually, I guess it's up 0.2%, but is it closed? I don't know. It's right around the same unchanged level. 10-year notes are down a little bit. Great. And the dollar's up. Dollar is up. And stocks are up. So I guess we'll see. Okay, so this Jika.io, it's a cool website to compare these different aspects of a company. I'm bookmarking it, so I can use that again. All right. So we got that. We got Lou. Oops. Do a Reddit check. Looks like doing everything to keep the baby out of jail. Right. Peter Hahn commenting on that. Will be written about in financial books. The entire world will celebrate a global phenomenon this week. No, not New Year's Eve. That is 3 weeks away. Avatar: The Way of Water officially opens this Friday with early screenings this Thursday. Millions of people will see it at AMC and Odeon theaters. Be one of them. No thanks. Another week of holding, another week of breaking box office records. Really? Best limited opening specialty box office. I mean, come on. Who fucking cares? Shills invading our sub. Yeah, every day. Can I post now? Boy, what a bunch of nonsense on here. Glad my 30,000 in Citadel hedge fund shorts helped. POS criminals. Wall Street billionaire pays for 10,000 employees and their families to party at Disney World for 3 days. 30,000 in Citadel hedge fund shorts. What are you talking about? What does that mean? You can't, it's not publicly traded. Yeah. Another one going down. Australian crypto giant Digital Surge going down. Never heard of it. Digital Surge. It's the latest. That was 2 days ago. So old news. We need retail unity. I looked at that already. Very important info. While you wait for the MOAS, here are a few things you should be doing. All right, pay attention. 1, make sure your mental health is good. You cannot operate in an effective manner in this world if your brain isn't right. Okay. It's gross oversimple. 2, if you do not have a skill or business that will help you generate more money post MOAS, you need to be developing a skill or business that will. I thought the whole point was not to have to work again. Like, you know, we could have learned that from Tom Vu here. We did.
Ghosty Tom.
Al Woodruff took my seminar, now enjoying his success. Are you going to make 1991 the year for you to achieve your financial freedom?
See, that's the point. But anyway, 3, if you have a poor mindset, develop a wealth/abundance mindset. This will help you stay wealthy. 4, knowledge is power. I love this. Learn more about finance, budgeting, different investing options. Learn and build up your wrinkles. So you're supposed to do this while you're already waiting for something that you believe is a sure thing that will happen because you have no finance, budgeting, or investing skills or knowledge. Fantastic. Work out. You can't have a productive life if you are not well. Evaluate who your real friends and family are. Cut off any people that you get a weird vibe / shady / hateful vibe from, right? Cult, obviously, cut off communication. You know, what do they call that in Scientology? Disconnect, I think, or anyway, have a plan of how to reinvest after MOAS. For example, if you're a beginner trader and the S&P crash big, maybe set aside 40 to 50% of dollars long in S&P or other clear opportunities, not financial advice. Okay, good. Proud of you, apes. Boy, I mean, this is just gaslighting, gobbledygook. Jesus Christ. The real test of diamond hands will be during. Okay, so, this person, this is suspicious to me. Real test of diamond hands will be during the MOAS when we shoot up and they halt us and drop the price with a fake end of the squeeze. Very important message. Turn off the stock lending program on your broker. Very important so they can't borrow, right? Didn't we debunk that months ago? Turn this off now. Had to. Fuck these cunts. 880 shares of ape at 90 cents on Webull. Great. You helped. MOAS is coming, a motivational post. I mean, this is all by the same clown. AMC popcorn to be sold at grocery stores by 1H 2023. 1H? First hour? I don't know. Adam Aron misspelled wrong. Unusual idiot. nearly 3,600 shares of ape at $1.26. So they're, God, 1 month ago. 1 month ago. So there are some AMC stock submissions, but a lot of stuff in funny videos, funny signs, funny videos. Here's some other AMC stuff from 3 months ago. So they're not exclusively an AMC poster, looks like. So this is the SPY. Honestly, what the fuck is this? From 1 month ago? That was the increase. The last increase. So they're asking what the fuck is that? So if all ape shares is owned by retail, yet brokers can't find ape shares available because majority of retail have IOU shares because synthetic shares exist. Deep breath. Selling your ape shares would be hurting AMC. You're like helping the hedge funds who are short in AMC by selling ape. Is like handling your car keys to a car thief. But the majority are not owned by retail. Quick question. Why the fuck don't movie theaters sell movie merchandise outside by the concessions? Like posters, t-shirts, with a nice display and register that would make everyone more money. Because people don't go to a fucking movie theater to buy stupid memorabilia. Go to GameStop for that. That definitely needs to be something. Yeah, right. So you can waste your money on other shit that won't help AMC at all. Okay, here's GME Meltdown. Prophecy has been written. The mother of all meltdowns, big stuff bacon, classic meltdown. It's a sign. It is a sign. Apes are just losing it completely now. What even is this thing? 3,000 upvotes at the moment. Bullish Q3 earnings call overshadowed by sub-deletion FUD. Meanwhile, GameStop lit the fuse on dividend distribution and or M&A / spinoff / carve-out share offerings. This is not a drill. No dates. Just be prepared to be rich. This is GameStop, I guess. One fact to completely disprove all ape theories. If GameStop is shorted 50 times over, who is the counterparty that bought all the fake shares that Citadel sold? If the fake shares are spread out over the entire market, then you would expect entities like Vanguard and BlackRock who hold significant portions of the entire market to have more GME shares than the reported float. You can't make a profit from shorting if you're both shorting and buying the stock. So saying they are in bed with Citadel makes 0 sense. So simple question, who are the dumbasses who bought the tens of billions of shares that Citadel sold? And if they exist, why are they willingly taking their loss? Well, it's a good question. I mean, it's obviously their other criminal hedge fund buddies that they're trading it back and forth with, right? See, but they don't believe that. They believe 50x the 250 million float is shorted, but their optimistic DRS predictions were 90 million. So they don't believe apes own 12 plus billion shares. Okay, but that doesn't really answer the question of who bought the shares. Anyway, leaked footage, generational wealth, joining a cult and losing everything in the Trojan horse. So I was at GameStop. I was buying a mountain of their Cat 7 cables on clearance because they were an additional 50% off of the regular clearance price. When a colossal group of kids walked by the mall GameStop with their mom, they begged their mom to take them in, and the mom smiles and caves. I smile because I can see it in the eyes of the children. GameStop is going nowhere but up while they're buying a mountain of clearance networking cables on sale at GameStop. Right. How to go from plan to book on ComputerShare, right? Could GameStop buy a part of Activision so the rest of the Microsoft Activision deal gets accepted? Yeah. Title says it pretty much. Title, Titel, title says it. Speculation. Some people seem to think that Adam Aron doesn't care about apes. It doesn't matter either way because every person that is involved in any way possible with Harvard cares. This includes faculty, admin, alumni, current, and hopefully future students. The shorts are directly shorting Harvard too. In my honest opinion, the value of a Harvard degree will lose significant value or even become almost worthless if the shorts win. Do you think that some apes don't make hiring decisions? If so, think again. Adam Aron knows. Adam Aron graduated from Harvard. Edit, I will help you understand. Let's say that you make hiring recommendations and you are an ape who believes that Adam Aron is ripping off his shareholders. Would you hire a graduate from that school, when you can easily hire someone with the same qualifications who graduated from another school? What? Yeah, that's exactly what I said. What? Ape claims there are 8 million billion outstanding shares of AMC. Demands payment. Fuck you, pay me. Yep. I mean, the fact that you continue to ignore your shareholders and post this crap is unacceptable. When pounce. We have a right to know what's going on from Steelers Rule at Steeler Boy 101. Well, I'll just leave that alone, being from Cleveland here. Adam created Ape in order to pay off debt and also give apes a squeeze. He has multiple moves for the company and for the future. This is all about time. Patience will pay for AMC shareholders. Everything else is FUD. Shorts haven't covered. Fundamentally, we're becoming stronger. Ape. Jesus. Scrolling through this sub right now, listening to Requiem for a Dream. This gets my tits so jacked. It has been a pleasure serving with you all. Remind me, how does Requiem for a Dream end? Also, serving. Right? Job opening at the DTCC. I actually don't think that it matters being on the front page of Reddit or not. We just want to discuss our beloved stock here and not convince anybody to buy it. Buy, hold, and DRS. Right. Not convince anybody, though. Do you see the narrative they are building now? You don't need the sub. I don't need the sub. You are Zen. You are ape. They are fucked. Yeah. The only thing we're organizing is the order we fuck Ken's ex-wife in. First the large apes, then the pretty apes, petite apes, then the large apes again. The first step for an ape better world, gang raping a woman. Yeah, this is super stonk right here. That's super stonk. Complete garbage. Complete garbage. I think Ryan Cohen killed the ape movement when he dumped his BBBY bags, and we're just noticing now. God tier DD in the comments. Comments per day. I mean, yeah, of course, but the movement is not done. I've often thought Ryan Cohen reads these and is mused, but other times thinks, man, these people are idiots, and I can't explain like I'm 5 any clearer. So actually explain like I'm 5 by writing children's books. Regardless, I love this community, the DD theories and the tinfoil. So the new thing is booking on DRS, I guess. Apes have cracked the 741 code. It's good. I'm not inclined. It's metaphorical. Being a bit of a nerd when it comes to anything sound related and musician, my dream is to release music in the NFT marketplace in the future. Well, what a dream. I've recently become more interested in the solfeggio scale and its historical, it's religious and mystical significance. I've spent the last couple of days reading about it and listening to the frequencies within the scale. I think I'm going to use one for a piece of upcoming music. Religiously, in yogic culture for this post, but also Buddhist singing bowls are tuned to these frequencies. Each of the frequencies is supposed to resonate with one of the 7 chakras, cleansing and unlocking the energy associated with that particular chakra. That's when I saw it, 741 hertz. The frequency of Vishuddha, the throat chakra, unlock your voice. Could this be what RC has been hinting metaphorically towards all along? I think so. I think so. I don't know where everybody is, Model 3 dude. I'm not sure, but appreciate you being here. I don't know where Manny is. He's probably traveling. I know he's been traveling, so he could be heading to the 4th country in 20 days. As he said, 3 countries in 15 days, I think. GameStop NFT. Total marketplace volume. Why did they stop updating GMFT.xyz? GMFT.xyz. Oh, it actually works. Ah, yeah, it's not updated. Oh, you can change that's just change the color. Dreamy, dark. DRS is the computer share color. What a bunch of fucking nerds. Wow. And not the cool kind either. What can you call a single stock a portfolio? Ape is going exponentially down. They really underestimate the vast amount of intelligence and research here. Good work. Funds have at most 20 to 30 data scientists, can't compete against 100,000 to 600,000 ultra nerds. with varying educational backgrounds, most of which are advanced degrees, I'm sure. Some of these posts and comments remind me of how dumb I am. This sub is MIT in a forum setting. Grandiose narcissism. Okay. There's the fuck you pay me right there on in the original thing. Okay. See if there's anything else here we need to look at. We'll take a look at futures one more time and see what happens here. And then, oh, well, we better follow up with old scavenger.
Guys, what is going on? Happy Sunday. I hope everyone had kind of a good weekend to decompress and, you know, prepare themselves for the next week. Obviously, I told you guys in my last video that Monday we're back. We're getting back in the gym. We're getting back to the videos. We're getting back to, you know, doing our day trades, things like that. I'd like to get a couple lives in this week. I just don't know yet what day those are going to be, but we'll figure it out as a community when everyone's kind of, you know, available for those. One thing I wanted to talk about for this video is I just wanted to let everybody know, like, you know, over the weekend, obviously the weekend, everybody's home, nobody's focused, right? Because it's the weekend where, you know, the reality is there's not much going on in the financial world over the weekends. You know, if you, for an example, if you're an investor, you know, over the weekend, nothing's happening. So there's, you know, the weekend's a time where if drama's going to spread around, the weekend's going to be the time where, you know, that wound's festering.
Yeah, nothing happens on the weekends. You know, but, you know, that's when you can go ahead and put out ridiculous nonsense like, well, I mean, Disney has a amount of debt and Verizon, and why don't we see the negative articles about Verizon? They're not trying to get you to sell your Verizon shares. That's what the weekends are for.
Some things I'm seeing over AMC is a lot of people are obviously impatience has been something that, you know, being impatient has been something that's been going around for this play for a long time, right? This is something where somebody's in the red, somebody wants that money now, and people start lashing out and not
special
thinking
snowflake
clearly
Model 3 dude.
Obviously there's somebody who can't separate emotions from you know, from this squeeze play that we're currently riding in. And I'm in the same shoes as a lot of people out there. Like, I want this thing to happen tomorrow. I want to make our money from this and move on to the next play, right? Because there's a lot of other plays that are gonna you know, come into the works here. But
yeah, of course you do. I just want to get paid, man. I just want to get paid. Just give me my money. Fuck you, pay me. Right? That's not the way the market works, man, at all. The more you want it, the more you go down this ridiculous path of believing that you deserve it and that it's a sure thing that's coming. It's on your way. It's on its way. You've already won. The deeper you get into that, the less likely it is to happen. I'm just going to put it right out there. The more you dig your head in the sand and ignore reality and convince yourself that everybody's out to get you, everybody is your enemy, you're right, our group is right, we've already won clearly, and it's just a matter of time before they just hand over all of their money to us. The more these people believe that, the less likely it is to happen. And if anything like that were to happen, they'd be so far up their own asses that they wouldn't even react to it. They wouldn't handle it properly anyway. And I've said this for as long as I've been doing these videos, is that even if AMC were to squeeze, a good chunk of these people would still end up losing money because they have no idea how to trade at all. They probably even never traded, actually. They've only ever bought this and not ever closed a position, really. So they don't know how or when to take profits, clearly. So anyway, What a special snowflake we got here.
Right now, the reality is that AMC hasn't closed yet, so it's a waiting game, right?
It's a waiting game.
And
because that's how everybody I know got wealthy. They just sat around and waited, and eventually one day it magically happened. Yep, they didn't have to work hard or learn a lot or put in the effort. It was a waiting game. They just waited. It set the timer, waited, just like you were making a souffle.
One of the biggest reasons for me making this video is not, anybody out.
All the me talk, me, I. I mean, yeah, exactly, Model 3, dude. Why do we care what's going on in your life or what you think? I mean, really, we shouldn't even be watching this shit. I mean, when it comes down to it, we shouldn't even be giving this clown this much attention.
Out there can feel how they want to feel, right? It's a free country that we live in. It's a free world. Everybody should be able to believe and feel how they want to feel. But it comes down to
how to talk about feelings in this. What is up with the feelings? I thought you guys were robots, emotionless. You've already won.
Energy are you going to put
Why do you need to feel anything?
Forcing something to happen now, right? Because at the end of the day, we know how that's going to end. It's going to end in nothing.
We all know.
And in putting a bunch of energy, focusing a bunch of energy into something that doesn't need to be focused on. We already know how this ends. We're already seeing it everywhere.
That's the problem. You already know how it ends. Everybody knows how you expect it to end. Therefore, the likelihood of it ending the way you think it's going to end, it's approaching a limit of 0 right now. I mean, it's like a limit. It's approaching the limit of 0. It's an asymptote, if you will. It may not ever get strictly to 0. It's a limit. The limit is 0. But that means that it's not going to happen.
The tokenized stocks,
right?
The wrap tokens collapsing. We're seeing exchanges collapsing. We're seeing banks collapse. We're seeing pensions get bailed out. We're seeing...
Oh, there we go. The pensions getting bailed
out. We're seeing what we've been talking about occur that's been needing to happen.
No, you're not. No, you're not. You are seeing what you want to see. You are interpreting you are interpreting it as though it is a prophecy that is being fulfilled. Going back to the CSI thing, Jesus, Judas, and Adam Aaron. You're talking about it like it's literally part of the Bible. That's how they're talking about this shit now. Like it was ordained by God. You're on a mission from God. Like Jake and Elwood Blues on a mission. They're on a mission from God. Or Pee Wee Herman looking for his bike. I mean, come on.
This is a game of us.
It's like a big cable knit sweater.
Shares.
Someone keeps knitting
Not
and knitting
every day, right?
and knitting.
Shares. There's no margin. There's no nothing. We have cash accounts. We have the float locked, and the other side are the ones that are, needing investment, needing investor money to keep this game of charades going. We just seen it. We're seeing states do it with BlackRock. We're seeing, these states pulling out, billions of dollars. Because investors, big institutional investors, big clients are getting concerned, or, they're beginning to feel concerned for how these massive, institutions are trading their money, which is understandable. So we're seeing investors pull their money from these massive institutions, massive hedge funds, which inevitably are the ones we're up against, right? So everything we've been waiting for, long story short, is occurring. It's been occurring here for the last couple months, but obviously a lot of people got into this play early, especially me. I've been in it since the end of 2019. But a lot of people want this to happen now, but there's
2019
a chain of events that need to occur for this to occur, for this to happen. And I understand, back then many of us didn't know that is what had to happen, but now we do with the due diligence and all the research we've done. Everybody can feel how they want to feel. Everybody knows how I feel on this channel.
Yes.
everybody can
feelings.
feel how they feel. I can get comments in here that, you know, it's okay if people disagree with me. I understand that. I'm willing to accept that people are going to disagree with me, but we have a lot of energy in this community.
A lot of energy
that I don't think strategically makes sense to, you know, divert that energy into, you know, protest and drama and you know, just that dark hole of just bad things, right?
Dark hole of bad
things, things like that. But I don't think violence and
that's good.
Trying to screw over the company that we're invested in is the answer, right? This, you know, I mean, what happens on Wall Street, I say it time and time again. What happens on Wall Street isn't the CEO of AMC isn't to blame. They can only do so much stuff in AMC, you know, in relation and to their stock price on how Wall Street.
I mean, maybe he's not to blame for a squeeze not happening, but I mean, ultimately, it is his job to lead the company, and ensure that the company continues to operate. As it is, that seems to be up in the air based on the numbers, not based on what he says, not based on what these clowns are saying, but based on the numbers themselves. It's a dismal picture. So he is to blame for that, because you know, you look at the other. I think it was, I don't know who it was. One of these clowns today on here we looked at talked about Cinemark and Odeon and the other theater stocks, right? That they're not down as much as AMC is down. Well, Adam Aron isn't the CEO of those companies, is he? They have a different situation. They've taken different strategies, taken different actions. So if they're not in the same boat that AMC is, and AMC is in a worse predicament, then why are we not blaming the CEO? Why are we not holding him? Why are these clowns not holding him accountable, or at least being honest about the role of the CEO? And does he want a short squeeze to happen? Has he already cashed out from the stock? What are his motivations? And what is the actual, like, objective reality about the financial health of the company? That's way too many big words for this guy.
You know, trades their price or trades, you know, AMC stock. Sorry. You know, there's a big separation there. Wall Street's responsible for AMC shares. You know, the DTCC, et cetera, the regulators. And right now we have regulators that clearly, you know, are involved in a massive conflict of interest. So what do you want the AMC team to do other than coming into Q4? We've seen it like this, you know, flipping over to cash positive, making revenue again. This is what we need, you guys. This is the thing.
It's not going to happen.
Going to be the cherry cherry on the icing. You know, because what do we have right now when we look at the overall picture? We have liquidity drying up.
Tony Tinko says videos.
You know, one of the biggest arguments are, shorts, you know, are making billions of dollars on AMC.
Absolutely.
Remember, you only make money with the short when you close that position. You're only able to close that position when retail decides to sell their shares, which obviously we know that's not occurring.
Not true.
You know, to the size at least that they want it.
I mean, I'm going to bring up the Fidelity thing again. The buy sell, or not the buy sell, the institutional ownership of AMC, and you know, it's just like we can. I'll show you exactly why this is wrong here. I mean, it's not hard. Basically, this shit debunks itself. This here. I'll bring it up in a second.
I highly doubt, you know, we can see it with the volume that there hasn't been enough volume even for them to close their position. The days of cover is like 6, right? And when it's logic, right? When it's pure logical, like when they begin covering their shorts, the price is going to rise dramatically.
And what's going to happen in days to cover? I know you can think of this. You're smart enough to think of it. The volume will go up and days to cover will go down. Days to cover according to, here's Fidelity. That's based on the last actual report, November 15th. It's 3.77. So, but I want to look at the ownership here. Ownership and insiders. So an interesting trend happened in the current quarter. Institutions sold 155 million AMC shares. So the narrative that shorts need apes to sell their AMC shares is false, seemingly false, because institutions sold 155 million shares. So those are shares that could have been purchased by people who need to close their shorts, right? It makes no sense. What he's saying makes no sense, especially when retail investors hold about 60 to 2/3, according to this, of the shares. That's higher than 50%, but that's not the entire float, and that would just be a snapshot in time. This is always changing. We only have data that are reported at certain intervals. Now, there was a equity research report that came out, a couple of them this week here. Oops, have to bring that in. Here we go. This is from December 9th, AMC. We project that AMC will strongly underperform the market over the next 6 to 12 months. This projection is based on our analysis of 3 key factors that influence common stock performance: earnings strength, relative valuation, and recent price movement. Earnings strength is very negative. Relative valuation is very negative, and price movement is very negative. And then it just goes through those three characteristics of the stock. So clearly FUD designed to get people to sell, but do they have information about APE on here? I wonder. I don't know if we've had a round of ownership disclosures on this or not yet. I don't know if this is accurate or not, or when it is as of. But you do see institutions with it. It says other 99%. I'm not sure if it has anything to do with the preferred nature of the shares or what, but okay. What about GME? I don't like this new research thing here. 68% retail. Institutions not really doing much with it. Not really doing much with it. Okay.
So regardless of what the news wants to tell you, things like that, it's all a scam. But everything's happening the way we need it to happen right now. My advice to you, because this is what I'm doing, is don't get caught up in the drama, putting your energy into drama, trying to screw over AMC and make this happen tomorrow. Like, guys, I say it time and time again that all we need is patience, okay? We need people doing research. We need patience. We need to all be together on this, because the moment you start having a bunch of separation occurs, the moment things get a little hairy,
already happened, bro.
You know, inevitably stop the squeeze, but it's going to cause, you know, a lot of ruckus, a lot of potholes in the road.
A lot of ruckus.
Keep your head on straight. Don't get involved in that, you know, in that drama. Like, this is supposed to, like, we have the choice to make this fun, to make this good vibes, and to
losing money can be fun.
Remain happy, right? We have that choice. We, as the retail investors all together, we have that choice to live that lifestyle and to allow that to be the thing that occurs leading up to this squeeze. But we also have the choice to, you know, light everything in flames and just make it, you know, unfun. Like, I want this to be fun again. This is going to be something that's massive that occurs, and I think we have the capability to make it
fun because there was free money last year. Now there's no free money.
Enjoy the events leading up to this, because if you take a step back from the drama taking place,
it's like killing Michael Myers.
On what's happening, it's pretty substantial. Okay, go back to 2 years ago on what people were talking about with AMC. Like, what they were saying needed to occur back then is happening now. What I was saying back then, you know, when I first started my YouTube channel, is happening now.
Really?
Or on Twitter or whatever. But the biggest struggle is the patience. And that's something we need to have. It's something we need to have, because, you know, as impatient as people get, look at
a video 3 months ago called
right
Patience.
now as we speak, and look at what's coming into the beginning of 2023, guys. Like, if this doesn't squeeze now, let me tell you, what's coming in 2023, like, we could stop showing movies and just survive off the popcorn industry. Like,
AMC and the
pretty insane
$100,000
stuff.
ask.
So I just wanted to come in here, guys, Sunday. I hope everyone enjoyed their weekend. I'll be back tomorrow. Like I said, I'd like to get a couple lives in this week. Don't know what days they're going to be, but we'll figure that out.
AMC analysis doesn't matter anymore.
And I appreciate everybody. If you're new here, thank you guys so much for all the support.
5 digits is a reality.
Coming here, and thank you for the ones that have been here. And I appreciate everybody, and I'm pumped for this week. Every week's a new week, so make the best of it, and I'll see you guys later. Peace.
Peace. All right. Here's what I was referring to earlier.
Good. We can finally start the big meeting. Dottie, Chuck.
Let's begin, shall we? Shall we?
This box contains over 217 bits and pieces of information.
Where are the shares?
Exhibit A, a photograph of the victims, my bike, and me.
The AMC counterfeit shares.
Exhibit B, another photograph.
What's missing from this picture? It's just
AMC.
Me, without my bike!
Is this something you could share with the rest of us, Amazing Larry?
Amazing Larry.
Exhibit C, the horn I was picking up
at Chuck's Bike-O-Rama
when my bike was actually stolen. Exhibit D, Jimmy.
What is this? Too late!
Chip.
Looks like a pen.
Exactly. I bought this pen 1 hour before my bike was stolen.
Why? What's the significance?
I don't know.
Exhibit Q.
A scale model of the entire mall!
X marks the scene of the crime. These arrows here show the exact position of the sun and the hour of the crime.
Jupiter was aligned with Pluto. The moon was in the sun. Please save your questions until I'm through, Chuck!
Well, when will that be? A long time we wait.
We've been here for over 3 hours
2
now,
years.
and I'm not sure if any of us can see what all this is supposed to mean.
Oh, it's perfect.
Supposed to mean?
Everyone here knows what this is supposed to mean. And you've gone over something
again and again.
Gone over it again and again.
And again.
like
I have. Certain questions get answered, others spring up.
the mind plays tricks on you. You play tricks back. It's like you're unraveling a big cable knit sweater
that someone keeps knitting and knitting and knitting and knitting and knitting and knitting and knitting.
That's it right there. That is it. I didn't actually realize how well that fit until watching it, but holy crap, not a bad one. Okay. Well, who the hell knows? They're probably setting this up so it can crash or go down on Wednesday with the Fed. Shadow Stars has a video out in response to the idiot that we looked at yesterday. And we'll pull up a little bit of that video about stocks and crypto plays. Didn't respond to the tweet and video. I'm not surprised. I wonder if he will. You'll have to keep us abreast of that. Let's see what we got here.
Hey, good afternoon,
15
folks.
minutes,
Today I'm gonna
not
be doing a
bad.
quick video
Good audio.
about this one YouTuber I came across
Audio's
while I was
superb.
watching another YouTube clip or live stream from Scotty. But this account's called Stocks and Crypto Plays. Looks like he goes by Aquarius Angel 24 on Twitter. This is his most recent video on December the 10th. So I'm going to quickly play through it, and I'm going to be rebutting some of the terrible points he makes on this.
Hey friends, welcome to Stocks and Crypto Plays. I have an amazing video for you today. I'm so excited to tell you about what I'm going to share with you.
So he talks about Coinbase.
Stock, okay? You ready? 2, 1. $500 million. That's what they have on cash reserves. That's it.
So he's talking about cash on hand for Coinbase. Coinbase. Global.
So very evidence-based, obviously. Here's the link for the rest of it. And let's make 1991 our year for financial freedom, shall we?
We could never repay this wonderful man for all our wonderful experiences.
Pick up a pen and write down the location of Mr. Vu's
Pick up a
free
pen.
90-minute real estate investing seminar. Secrets of Success will be right back. Secrets of Success. Relax and
Slowly
enjoy
getting
the
through
good
the
life
secrets of
that
success
could
here.
be yours.
To be wealthy, you need to say yes to opportunity.
Using the Tom Vu techniques, I bought this house, made $33,000. If I can apply the Tom Vu techniques and make $33,000 on this house, you can do it too.
You may be thinking, well, Tom can show me all these bargain property, but I don't have any money to buy this property with. Don't worry about it. In my unique training, I show these people techniques and ways to tie up these bargain deal with no cash, no credit. That way you can make a lot of money without risking your own money.
Like you, I thought it took thousands of dollars to make profits and tie up real estate. But after taking the Tom Vu seminar, I learned...
Wow, look at that IBM PC back there. Holy shit.
You can tie up numerous properties like these and make lots of money.
It's about time for you to take action.
All right, guys, have a good one. Catch you next week.
But with persistence, serious, hard work, you can get there someday. Just think about this. If all of you who are watching TV, starting out in real estate at the same time I started out years ago, wouldn't you be more richer than I am today?